Hello, Michael Bull here from the Commercial Real Estate Show. We're in Boston for DisruptCRE, where technology and money and commercial real estate collide, right? Well, we just had a great session on crowdfunding. We brought two of our panel members over to get some takeaways from the crowdfunding session. And first of all, guys, could you introduce yourself, and so we can have a little fun, tell us what's your favorite television show?
Go ahead, Ben.
All right, Benji Mall. I'm the founder of ARCS Urban Capital, which is, I like to say, a forward-thinking real estate investment firm. Founded last year. We're about to complete our sixth deal, using crowdfunding as a means by which to raise capital, potentially. And my favorite television show would probably be Game of Thrones right now.
Nice.
My name's Doug Ellenoff. I'm a partner with the New York firm of Ellenoff, Grossman and Scholl. We are the leading law firm in the crowdfunding space, represent dozens of crowdfunding portals, both in the equity and in the real estate world. And while Game of Thrones is a great show, I think the best television show from an artistic point of view has been True Detectives.
Oh, nice. Well, my favorite show is Shark Tank.
As long as you didn't say Sharknado, that's all right.
That's great. Well, first of all, it seems like when I talk to a lot of developers, investors, sponsors of deals, and sometimes they'll talk to me about raising capital, and I'll ask them if they've considered crowdfunding, and they'll say, well, I've heard about it, but I don't really know much about it. So it kind of surprised me that more people aren't involved. How much funding has been raised by online crowdfunding? How many deals have been done?
Sure. So I think since probably the inception of these platforms a few years ago, there's probably been, roughly under 100 deals done, probably total, but that's doubling overnight. And then total deal size probably around
a few $100 million. But the orientation I like to give people, which is what I think Benji was saying, that's from a standing start. Mm-hmm. So while some people look at that number and say, well, that's relatively insignificant relative to the overall money that's invested in real estate, it's not insignificant at all. It demonstrates that there's an appetite for real estate sponsors to put their deals in an online environment so that investors who they wouldn't have had access to previously can see their deals and invest.
And right, it hasn't been here very long, right? What, since last September?
12 months, September 23rd of 2013.
Right, and so probably, 2/3 of that deal flow has been in the past few months. I mean, it's just gaining momentum on a day-by-day basis.
So the trend is a huge uptick then?
Without question.
And are these funds being raised mainly by the large sponsors themselves, or is it a lot of being done by third-party sites?
It's a healthy mix. Some sponsors early on decided that they were going to create the online presence for themselves and their own deals. You can check out Prodigy Networks, and Rodrigo Nino does it for himself. Other sites do third-party deals on their sites, and they get paid a brokerage commission for doing it. And yet again, there's another type of site that puts the investors into a special purpose vehicle and then gets what we call a 2 and 20 or some kind of carried interest for raising the money for those deals. And then lastly, there's what's called a posting website, where you just get paid a fee for the sponsor puts their deal on the site so they get exposure to investors.
Yeah, that's interesting. So there's a lot of choices out there. So what kind of tips would you give a sponsor who's out there and he has experience, he's done a lot of deals, his country club money's dried up, he wants to invest in commercial real estate right now? What tips would you give him for crowdfunding?
Well, this is something that I'm going through on a day-to-day basis. We're about to close on our 5th deal. Our 6th deal is under contract, and we're looking to crowdfund it. The biggest thing is, one, to make sure that your track record is buttoned up, because these crowdfunding platforms now, where they started from probably a few years ago to right now, they've gained so much real estate expertise, and if they didn't have it on their founding team, they've raised VC money and they brought in real institutional real estate experts. So they're really digging into the deals and the operators. So, it can't just be an operator that has a deal that you might want to get funding, so you just throw it online and hope you can collect the fees, you darn well better believe in that deal if you're going to be trying to bring it online.
Well, I was going to try to raise money for my meal ticket tonight to eat dinner, so I'm going to need more experience for that.
Well, Benji may be available for that funding, but I'm not sure the crowdfunding industry will be. What I would add to that is the notion that the B and C deals are going to be the ones that get vetted through these platforms and allowed to be on the platform is not accurate. These are not self-selectingly adverse selection. The principals who own these sites, as Benji's appropriately pointing out, are earnest professionals who are learning, if have been acquired by hiring talented people who are help vetting these deals. And so while it's a great new avenue for raising money, the pathway to get on there is by being diligent and respecting the crowd, showing them good deals, and giving them a good return and not trying to abuse them.
Yeah, I'd just like to add kind of one quick thing is, we talked about this a little bit on the panel, but as a real estate operator, we're very focused on our brand and what the crowd, raising capital from the crowd is going to do for our brand. So if we bring a deal that we don't believe in and it goes sideways or it doesn't perform, as we had underwritten, well, that's going to hurt our brand online, and then the crowd might not necessarily want to invest in the future. So we're very much focused on finding attractive deals that we're putting our own money into, having our own investors on the side. None of these crowdfunding sites are going to talk to your buddy unless he has the country club money on the side, because they need to know that, God forbid, the investors on the crowdfunding site don't like the deal, he can still close it.
Right.
So, he certainly shouldn't tell them that he doesn't have the money on the side to do it.
But let's carry the country club analogy further. If you burn your friends at the country club, don't enjoy golf or tennis there again. The crowd has social media as their tool, and they are known to be noisy when they don't like what they've seen. So if you lose money, I'd like to think in a responsible manner they'll be forgiven. You'll be forgiven. On the other hand, if you've done it in a way they don't find to be responsible, I don't think you'll have a great shot at raising money online again.
Right. It's just like eBay, Amazon. At some point, us operators are going to have stars under our name for how well our deals have performed, and so just keep that in mind.
Yeah, so good deals are important. They deals that pencil out, they work well, that you have good faith in. But what about the types of deals? You mentioned maybe B and C weren't good. Is this best for core Class A assets in Boston and New York and San Francisco? Or can you do development deals yet, or is this just deals that have good leases and income in place? What's a good property to you?
All the things you've described, I think, will happen over time. Mm-hmm. Yeah, it's an early industry, so I think appropriately the platforms are taking a more conservative approach, and they want cash flowing deals. Investors want cash flowing deals, but over time, I do think that you will see a lot of those things that you've mentioned. I've been in touch with Class A real estate developers who want the crowd to participate, but right now, the crowd's not raising that kind of money in a timely manner, so there's a misalignment, so it's not going to happen for development deals in that way yet. Over time, absolutely.
Well, that's an interesting comment, that it's taking a little more time than they thought, because I thought one of the benefits of crowdfunding was it could move pretty quickly, that you could raise money a lot faster than you could going from meeting to meeting to meeting to meeting.
I think that's a common misconception.
Really?
Yeah.
Yes, it is a misconception, and I wouldn't want people to believe differently. Although I'll tell you, when the deal resonates for the right thematic reason, and Realty Mogul has had the Hard Rock Cafe deal that raised the money reasonably quickly, and it was a meaningful sum of money. It can happen, but it's all whether or not the deal is what investors want at that moment in time.
Right. So one thing that we've found is that some of the core type deals that have lower returns, and specifically cash-on-cash returns, investors, given what's been happening in the market the past few days, investors want safety, but they also really want yield, and they love to see that 9, 10, 11% cash yields. So if you're buying a core deal in Boston and you probably can't get to those 9% cash yields, what's the story behind it? It has to have something about it that's going to attract those investors.
Yeah, that's a good point. And speaking of the investors, how about a few tips for investors that maybe they want to invest $40,000, $50,000 in a real estate deal? They see crowdfunding as a great opportunity to do that without having to deal with the management and headaches of running real estate. What are some tips for those investors?
Use your common sense. Use your real estate investing experience online the way you would do it offline. If you don't know Benji, check out his background and you'll see his accomplishments.
If he buys me dinner, I think he's probably a great guy.
What do you want? You want a nice steak? Let's go do it.
But is he putting his own money into the deal? Same rules apply as in any friends and family investing. Make sure that the platform are responsible people. They've done good deals previously. Then you want to know, are they a broker-dealer model? Are they licensed? Do they do due diligence like we talked about on the panel? What type of due diligence do they do? Do they do background checks? If they're a broker-dealer, they have to. They are FINRA required to do those things. If they are another type of business model where they co-invest, you can take comfort because they're participating in the transaction with you. If it is a platform like CrowdStreet, which is just a posting platform for deals, they have no obligation to do any due diligence. That's not their job. They're like a newspaper would advertise. So caveat emptor, be aware of what your responsibilities as an investor are. And the last thing is, $50,000 is a responsible amount of money for an accredited investor to invest. Don't invest more than you're capable of losing, period. It's a suitability overlay.
I was going to add kind of the way that I'm thinking about it, and many of my family and friends are thinking about the deals. I'm saying two things. One, think about the incentives and what the fee structures are, and make sure those are appropriate and that you really understand how the sponsor's getting paid, how the crowdfunding site's getting paid, and are they really only getting paid if it performs well, or are they getting all kinds of other fees? And then, the second thing is just think about the deal, right? I mean, are there office tenants in there that have long-term and good credit, or is it a bunch of crummy tenants in a small retail shopping center that if they leave tomorrow, and there's too much debt on the property, you could lose the property?
Good point, gentlemen. Thanks for joining us. I guess we'll join the party now, all right?
Thank you, Michael. Appreciate it.
Thanks, guys.
Nice
for more information from anyone on the panel, check out commercialrealestateshow.com. The Commercial Real Estate Show is brought to you by Bull Realty Commercial Brokerage, a great place to do business. Visit bullrealty.com. RealNex, a comprehensive suite of powerful commercial real estate tools at an incredibly low price. Visit realnex.com. That's REALNEX. Sozo Web Hosting and Cloud Solutions. Secure, reliable, and worry-free. Visit sozo.com. That's SOZO.com. FIU, Florida International University. Earn your master's in real estate online in as little as 10 months. Visit FIUonline.com. And by France Media, providing exposure to the world of commercial real estate. Visit francemediainc.com. For more information on these great companies or for additional podcasts, videos, or blogs, visit CREshow.com.